Hey friends, Lucien here with the Bullish Bears team making this VWAP trading video, otherwise known as volume weighted average price. So VWAP is a very important indicator that traders are aware of. It's an intraday trading line that basically is very similar to a moving average, either an exponential or a simple moving average. It's basically a average price intraday of the stock. So it's really used for key support and resistance areas. Again, it's another line of defense. Obviously, you want to look at support and resistance, candlesticks, then moving average lines. Obviously, they're lagging indicators. But they're important forms of support and resistance. And then you want to be also extremely aware of VWAP because VWAP is, again, a very important indicator that traders are aware of throughout the day. So it's kind of, again, the average price of the stock. So the farther a stock is away from VWAP, the more it wants to gravitate down to it. Similar to moving averages, like the farther away a stock is away from the 9 EMA or the 13, depending on whatever one you use, the more it naturally wants to gravitate back towards it. Same thing with VWAP. The farther a price is extended away from VWAP, the more it wants to return back. So whether it's overbought or oversold, it's kind of like almost like an equilibrium level. Again, the average price of a stock. Intraday. So give you an example right here. I'm going to show you a few examples, but take a look at ONCS. You'll see this stock went up and it was riding the 9 EMA today. So again, when a stock is trending above the 9 EMA, that's a bullish sign. When it starts to close below it, it's potentially a sign of failure. But as you can see, as a stock goes up, you'll see these green dots are my VWAP indicator. You can see over here, VWAP. Notice when a stock gets farther away from VWAP, it naturally wants to gravitate back. No guarantee it'll do it that day, but at some point it's going to want to naturally pull back to the area, and then it's just a matter of whether it's going to go and touch it and bounce back up, or touch it and then fall and fade, or come close and then not touch it at all. Again, no one can predict what a stock's going to do, but as you can see here, stocks overextended past this 9 EMA. What's it want to do? It naturally wants to gravitate back. And as you can see, little touch just taps VWAP and then it bounced back up, kind of traded sideways, and then it came down. And you'll see a touch here, a touch here, a touch and a hammer to go back up. So now you have 3 touches, went back up, came back down, went up. So now like that tug of war around VWAP is extremely important. That's why it's very important to look at support and resistance areas, candlesticks, what's happening with the price, level 2, time and sales. You have to look at the entire big picture. Just because a stock's above or below VWAP doesn't mean it's going to go one way or the other. You have to watch everything together as a whole. Watch the moving average lines. Watch if the 9 is above the 20 or the 20 is above the 9. The 9 above the 20 is obviously more of a bullish sign. The 20 above the 9 is more of a bearish sign. And then when the EMAs are pinching or trading sideways, that's consolidation action. But as you can see, the price is up here, riding up. It's far away from the VWAP. Obviously, traders want to take profit. A stock just doesn't go up forever, so eventually they take profit. And as you can see, when a stock falls down, its first line of defense obviously is the 9 EMA, then the 20 or the 13, whatever you're using. The 13 is basically the in-between of the 9 and the 20. So if you're shorting down, 9 would be the first area basically of support. Then the 13, then the 20, and then obviously you have VWAP down over here. And you can see price went down, touch VWAP, went up, and then obviously you got to watch what happens from there. But VWAP, you can see it's a very, very critical indicator. When price is above VWAP, it's more of a bullish sign. When price is below it, it's more of a bearish sign. It's a key. It's a really, really critical key of area of support and resistance to pay attention to. Again, over here, you can see the stock going up. It's riding above, comes back down. You can see it falls below the 9, kind of consolidates between the 9 and the 20, touches VWAP, goes back up, and you can see it kind of went back up, came back down, and look, touch. Like, look at all these touches to VWAP. Traders are very, very aware of that. And obviously now when a stock gets, and these EMAs are pinching, it's tough to trade a stock when it's trading sideways. Ideally you want to trade it going up if you're going long, or shorting it at the top, at an overextended area, or trading it when a stock's going down with a 9, the 20s over the 9 trending downwards. But we'll look at a few examples. So here's a bullish example of it. Let's look and see if we can find a bearish one of VWAP. As you can see, not the greatest area. This is kind of a bull flag, so you can kind of see it fell down here. But you can see prices somewhat farther away. Again, it's further away. You can see it's oversold over here. So price naturally wants to gravitate back to the moving average lines. So obviously the 9 is the first line of defense. It's still somewhat close to VWAP. You can see 167 to 170 kind of pulls back, goes sideways. And look right here. It's trying to get closer to VWAP again and fails. But you can see, like, you see the note, it's the gravitational pull, like traders are aware of. A lot of times it'll hit it and fail. Sometimes it'll keep going. Let's see if we could just see a few more examples here just to show you. I'm just picking some random ones here. You can see here, this one just completely just sold off. This is a kind of not really the greatest example. This is on a 5-minute, and you can see goes right back to VWAP. Look at this, touching. Look at all these touches of VWAP. That's a very, very key area. And now you have all this, the 9 and the 20 there. It's kind of a mess, but you can see, look at all the touches of VWAP. That's something just to obviously pay attention to. Traders are watching that. Let's take a look at, let's remove the drawings here. Just showing you a few examples just to give you some diverse examples of what it looks like. This one went up. VWAP was down here trading sideways. It went above, like it found its peak here. This is very erratic. It had a really good pop, came right back down. Kind of this kind of a wedge pattern. It's a little tough to trade this. You got this kind of doji or this inverse hammer, candlestick here, but you can say it was kind of it was broaching overbought, and what does it want to do? It naturally wants to come back down to VWAP, and you can see it was 1, 2, almost 3 touches, and then it fades. Now when price is below VWAP, that's bearish, so you can see that's a bear flag here, and now it's just trading sideways here. A lot of times it'll just kind of completely fade. Let's see some other examples here. There's other times where a stock will kind of come up, fades down below, goes back and retests it, trades sideways, and then you'll see again, retest, and then it'll go, and then look, you'll get a little bit of a close above VWAP here, right? So you can see, oh, okay, maybe this is a potential reversal. You can see the 9 is over the 20. That's a bullish sign. Price is above VWAP. That's a bullish sign. But just because it's a bullish sign, you got to look at the pattern. This is kind of almost like a descending, kind of like a descending triangle or a flag or a pennant pattern. You can see it could be either way. It could be a symmetrical triangle, or at the time it could have been a descending triangle. You could have said this is a double top. There's so many patterns within the patterns, but as you can see, it got above VWAP, but just because it got above VWAP doesn't mean it's going to stay. And then look, sometimes it goes and it fades down, and what is it doing? It's hovering right around the EMAs and VWAP, but obviously when you're looking at that, there is some separation. That's good, but it doesn't, if it can't hold, and then you obviously got to be careful of previous high of day resistance areas. That's where traders are going to be paying attention to. Once it fails, if it goes above and then fails back down, that's potentially bearish. And as you can see, now you got these EMAs trading sideways. They're kind of pinching in. It's super hard to trade something like this. But again, you have to look at candlesticks. You have to look at patterns. Look at the EMAs and the separation. You want to clearly define separation. Like this is a bullish. This is very bullish. Now, again, that's super overbought. As you can see, perfect example, when a price gets up like this, it wants to pull back down to VWAP. This is pre-market. It's a little bit different of a story. But as you can, either way, it's still when a price gets like this, even in the market open, it wants to come back down to VWAP. So pay attention to the 9 EMA, the 20 EMA, VWAP, or if you're not doing the 9 and the 20, you're using 13, pay attention to the 13. Traders also pay attention to the 50 and the 200 SMA as well. But it's all, again, matters of support and resistance. Then you have something like this, goes up, and it's kind of just trading sideways above VWAP. But as you can see, it's above the 9, and what's it do? Boop, right down to VWAP, bounces up, hits it again, stays above. But look, these EMAs are trading sideways. They're pinching. What's it do? 1, 2, 3, 4, almost touches here again, back up. It's just trading sideways towards that equilibrium level, but traders are paying attention. VWAP, again, when it's above VWAP, that's more bullish. When it's below, it's more bearish. Let's do this one here. So as you can see, so again, you can see VWAP, it just goes all up and down and trades. Obviously, the more the market's open, the more it kind of trades. As you can see, gives you more of an average price. But in the morning, you can, when a stock goes, you can see this one right here. This one completely dropped down here. What's it want to do? It wants to gravitate back to VWAP. So you can see VWAP of these green dots. It fell down, went up, came back down, and it went up, tested, came back down again. So it failed, and it's forming like a descending triangle, as you can see, this kind of descending triangle pattern. And that's either going to fail and go down, or the buyers are going to come in, which they did here, bought it, and look what it did. It hit VWAP, and it kind of went up above VWAP. See that? It went above it, and then it kind of smacked back down, and then it kind of went up from there. And then at that point, it continued, but then look, it got overextended. What's it want to do? At some point, it wants to pull back down towards VWAP, and what did it do? It collapsed down, bounced back up, and then you can see doji, 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 all this little indecisions mixed up with those pinching EMAs, which makes it very difficult to trade. You want clear, defined patterns. You don't like the messed up jumbleness trading to the side. No matter what date pattern you're forming, you want to ideally have a clearly defined pattern. You want either something clearly crossing and going up with price going up, or clearly crossing and going down, like you can see over here. The 9 is below the 20. That red is the 20. The 9 is the blue. This is a clear downtrend. When price is bouncing off the 9 moving average and falling down, it's clear to see. When it's going up, it's clear to see. You obviously got to be careful. The bigger candles, obviously you want more of a separate, more of a slower grind. So let's take a look at this one right here, ONP. You can see how this one, it's tougher to see this on the 5-minute, but we'll go to the 1-minute. And let's take a look at this one over here, ONP. So you can see it's just kind of riding above it. It's above the 9. It's above VWAP. It's going all the way up here. And as you can see, look up here. See how far that is away from down here, this VWAP? What's it want to do? It wants to gravitate back down. Falls below a few candlesticks below the 9. You can see it's hovering around VWAP. It's still holding. Goes back up for one final push. Finds the top. Boom, shorts kind of coming in, breaks below the 9, falls below the 20, then you see a 9 and a 20 crossover, and price starts to fall. Now it's below this VWAP, and now it's bear flag. And so bear flag, bear flag, bear flag, bear flag, and then watching the EMAs. Again, moving averages lines are support and resistance. VWAP, support and resistance. This orange line is previous day close, support and resistance. Candlesticks, support and resistance. Map out your support and resistance on a daily chart. Then come in intraday, find the support and resistance areas, right? The peaks, you can see a peak resistance area here, one that was over here, back of the day, in the start of the day would have been a high day breakdown over here. And then you're coming up to these areas and you're seeing these areas again, like a cup pattern goes and breaks above. Then you have a high day, comes back down. It can't hold this previous resistance. Now with support, it falls down. And then obviously, so you're looking at support, resistance, candlesticks, moving average lines, then the VWAP. And now, again, price above VWAP is bullish, but it's going to want to come back down at some point. And then when it's below, it's bearish. And as you can see, now it's just trading sideways, and it's going to, it's looking bearish right now. But obviously, you got to see what's going to happen with the stock. So that's VWAP. It's just an average price, volume weighted average price. It's just the equilibrium, basically the average price of the stock intraday that traders really pay attention to. So it's a very, very important indicator. Again, if you're not a member of our community yet on Facebook, come and join us. We are the Bullish Bears. We call ourselves Stock Market Community for our group on Facebook. Come and join us. We have lots of members. Pretty much get your questions answered about the stock market day or night from really anybody in the community. We keep all spam and garbage and stuff like that out, so it's all great quality content with good members. So make sure you come and join us. It's a great place to learn. You can like our fan